Castor seed and oil have become a success story in India. Yields could be considerably increased, profitability improved, production expanded, and less area is now needed to satisfy world demand. India could increase its market share, and today India is accounting for 92% of world production of castor oil and 96% of world exports. When we met last year, prices were approximately $350 higher than they are today. We have seen high price volatility. There is a high likelihood that price swings will remain large. They will probably widen. Today I will give my comments to the global castor market, and I will also refer to the edible oil situation and outlook in the second part of my presentation, to find out to what extent this is going to impact prices and future plantings and production of castor seed in India. World production in the current season is likely to reach 2.2 million tons of castor seed. This is the second highest production level ever recorded, only trailing the record of almost 2.4 million tons registered in 2011-12, 8 years ago. India is producing a record crop this year of probably 2.0 million tons or slightly more, compared with 1.1 million tons last season. Last season we had this tightness which boosted prices. Now we have more ample supplies. For India, it's a record crop. But as we can see here, significant reductions over the past 8 years in China, as well as in Brazil. Farmers in these countries simply cannot compete with Indian farmers. And therefore, Indian market share has considerably improved. We see this here on the slide. World castor oil production is likely to rise to 800 to 810,000 tons in India, 92% of world production. Very little in China, in Brazil, and other countries. Now let us briefly look at the world castor oil balance. Here we summarize the major countries. Everybody who wants a complete table is of course invited to contact me. Complete breakdown by country or a quarterly overview or whatever, monthly prices, whatever. You contact me, I'm available to be of service. Very clearly, last season was a season of tightness. Production dropped. Consumption could only be satisfied by sharply reducing stocks. This season there will be a production surplus. Stocks can be replenished, and also world consumption is rising. We expect world consumption to rise to almost 840,000 tons. Increases in China, European Union, US, as we can see here in the slide. Significant growth in China, interrupted early this year by the coronavirus uncertainty. How long will it last? When will it be successfully contained? What effect will this finally have on economic growth, economic activity, disposable income, and total consumption in castor, but also in other commodities? Let us now look at the impacts of edible oils. And to start with, we look at the daily futures prices at the Bursa Malaysia derivatives. Very significant increase since October. Now we saw this reversal in prices with a significant setback by 20% starting on January 10. 20% decline. A similar decline occurred in the cash markets in Indonesian FOB export prices. Also soybean oil prices declined, sunflower oil prices declined. This setback was triggered by the uncertainty and fear caused by the coronavirus, but it was also triggered by a slowdown of Chinese purchases, of Indian purchases. It was also a reaction of consumers to the sudden increase in prices. We have seen some invisible stock reduction, which helped to keep purchases and imports at a low level, but this is going to be temporary. The price decline was also triggered by political disturbances between India and Malaysia. The Indian government urged the Indian trade not to purchase Malaysian palm oil. A bearish effect on Malaysian prices. Instead, India is buying mainly Indonesian palm oil. So it's mainly trade flow changes. India is buying Indonesian palm oil. Indonesian palm oil prices appreciate and develop a premium over Malaysian origin. Other importing countries are switching a larger part of their requirements to Malaysian origin. India is also partly switching palm oil imports into imports of seed oils, primarily soybean oil and sunflower oil. But overall, Indian import requirements continue to rise in the current season. So it's mainly a trade flow issue. And the reaction of the market to push down Malaysian palm oil prices because of this shifting is not fundamentally justified. On top of that, we have to realize that total export supplies of palm oil from Malaysia and Indonesia combined are shrinking in the current season because of lack of supplies. Now we have summarized here our outlook for the Indian edible oil balance. Insufficient production, rising demand. We have made some downward revision from our earlier estimate on the demand side, but we are still expecting Indian consumption of edible oils to rise by almost 0.4 million tons in the current season, and we expect a very slight increase in the capita consumption, in the average consumption per person, from 16.0 kilos last season to 16.1 kilos in the current season. And this requires an import volume of about 15.9 million tons of all vegetable oils, a new record. A new record. I consider it possible that India will import 0.5 million tons less palm oil, but increase imports of soybean oil and sunflower oil, as we show here in the table. Indian imports are likely to, edible oil imports are likely to be very small in the January-March quarter. Stocks will be reduced. Pent-up demand has been created. We may also see some invisible stock reduction, but this has created pent-up demand, and India will have to become a more active buyer in the April-June quarter and beyond. And if this happens at the same time at which China is stepping up purchases, we could indeed have a considerable buying wave, which is going to influence prices to the upside. Another reason is to be seen in the development of world production of palm oil. Over the past 3 seasons, combined growth in world production of palm oil was 18 million tons. 18 million ton increase in the 3 seasons combined. So we all have become used to ever growing supplies of palm oil. But this is not going to happen. We have come into a period of shrinking supplies for different reasons. Biological yield cycle, some weather issues in Indonesia, lack of replantings and aging palm trees, declining yield potential. On top of that, a reduction of fertilizer application in the period in which palm oil prices were very low, in the 12 to 15 months until about July 2019. And these fertilizer reductions are now resulting in lower productivity of the palm trees, which has already affected production in July-December 2019, and which is going to affect production in 2020 and 21. Now, looking a little bit closer, world palm oil production in the October-December 2019 quarter was down 1.4 million tons. More than expected. Malaysian and Indonesian production fell short of expectations. Production will continue to decline seasonally in the January-March quarter. Malaysian production was particularly low in January. It is now going to increase contra-seasonally in February and March. So we expect the February production to be about 10% above the January production, and we expect a further big increase, month-on-month increase in March, and a further increase in April. But for the whole quarter, for the whole January-March quarter, Malaysian palm oil production alone is going to be down by approximately 1 million tons from a year ago. This is bullish, because it comes at a time at which Malaysian palm oil stocks are already small. So we see here in the slide, with little relief coming from Indonesia, also Indonesian production is not coming up to expectations in many parts. Yeah? Thailand is still depressed, Colombia, Papua New Guinea. So we have some issues. And in these 2 quarters, October, December, January, and March, world production is going to shrink by 2.4 million tons, according to our forecast. There will be some improvement. We see some year-on-year increases in April, September, but overall world palm oil production is going to be down by approximately 1 million tons from a year ago, according to our current forecast. The first decline in 4 years. And this creates a problem because consumption of palm oil is still very high, world consumption, partly because of the ambitious biodiesel program in Indonesia. Palm oil consumption is also high in many countries in the food sector. So the job of the market is going to be to ration palm oil demand with higher prices for the rest of this year. Yeah? There's also the need for higher prices to probably to convince the Indonesian government to temporarily reduce, at least temporarily reduce, the biodiesel admixture mandate, which currently still stands at 30%. And we don't have enough palm oil supplies in the current year to satisfy B30 in Indonesia and at the same time satisfy global food demand. So in summary, world stocks of all oils and fats is going to shrink, probably by around 4 million tons from a year ago in the current season. This is huge, this is bullish, and this is not reflected in current prices. Soybean supplies are ample, but soybean crushings is still curbed by insufficient meal demand, mainly in China. So also soya oil output currently is still curbed, adding to the supply problems in palm oil. Conclusion, edible oil prices are going to appreciate. We see here the slide with the setback in prices, significant setback in prices by 19% in palm oil, by 15% in Argentine soybean oil. Prices edible oil prices, in my opinion, are going to stabilize. Probably they are just now in this stabilization process. Always difficult to say where the lows are, but the outlook for the coming weeks is for higher prices, and the price increase could be significant, surpassing the earlier highs we made in early January. This is going to spill over to the Indian market. And here we come back to castor. And the last slide here was the development of castor, domestic castor prices. Prices of castor in India have already come under considerable pressure, as we can see here. They are below competing oil seeds. There may be some additional price pressure, probably not much, but with appreciating edible oil prices, we should also see oil seeds, rapeseed, soybean, groundnut prices to recover, deteriorating the profitability of castor. So it is very well possible that in this scenario, Indian farmers will reduce plantings of castor this year, and this is likely to create a lower production, lower castor production in India next season. Thank you for giving me the opportunity to talk to you. Wishing you a successful conference.